Ruchi, I believe you got you on a better connection this time round. What exactly are you picking up? What are the odds of a stimulus package being announced by the government, especially since the private sector is refusing to increase its capex? I don't think
and that's exactly the reason why at this point of time we understand that the government is in a huddle to figure out a way forward with respect to what needs to be done with the economy. We understand that finance ministry is on tenterhooks at this point of time. They are assessing the CAT data very closely to ascertain that what needs to be done to push exports, to see what needs to be done with respect to imports, how that can be controlled. In fact, we understand that finance ministry along with commerce ministry will get together to look at ways to push exports in the economy, especially at this point of time. One also has to look at what is happening with respect to the fiscal numbers, the fiscal data numbers, because remember we have seen 92% of the spending already being done so far, which also goes on to show that only the government is pushing the pedal on spending. Very little spending is being done with respect to the private players, and which is exactly the reason why the government at this point of time is figuring out what is going to be the way forward. If you look at the data, if you dissect the data closely, you will see that the government is falling short on on many of the parameters of estimates that they had set out during the budget making exercise. The RBI dividend has been far lower. Apart from that, the government is yet to get a significant amount of money coming in from divestments, and also the revenue collections from GST have also been rather weak because the input credit claims have been far higher than what the government was anticipating. So at this point of time, the government's own finances are in a very precarious position. Add to that, they will have to give in money to states as well as a part of the GST compensation to states, and which is exactly the reason why the government believes that something has to be done, something out of the ordinary. Because remember, even if the RBI in their October policy, if they go ahead and slash rates further, firstly it will have a lag impact on the economy, and secondly, does RBI really have the elbow room to go ahead and cut rates at all or not, is something that we will have to watch out for. Perhaps at this point of time the government will look at short-term and medium-term measures to boost growth, and whether it will be at the cost of the government's own fiscal deficit target of 3.2% this year or perhaps 3% next year is something that we will have to watch out for.
Thanks a lot, Ruchi, for giving us that update on the government's plans to boost the economy. In fact, the recent macroeconomic data is keeping the government on tenterhooks, and top sources tell ET now that the government is in a huddle to assess if the economy needs a stimulus. Maithili is also there with us right now. And Maithili, tell us, what is your take, and is there a case for fiscal stimulus?
In a scenario where the economy doesn't seem to be going anywhere and private sector investment is not picking up, there is no alternative but to increase the public spending. Now, where does public spending come from? Essentially from government coffers. So ideally, the best thing would be if you could maintain the same fiscal deficit target and increase the revenue side of the government's budget. That is, go in perhaps for aggressive disinvestment. At a time when the IPO market is booming, there's no reason why government could not do a much more successful disinvestment program than even what it has in the budget. So if we could do that, that would be the first preference. Go in for aggressive disinvestment, stick to the fiscal deficit target. If for whatever reason government is not able to do that, then there would be a case, I think certainly, to tweak the fiscal deficit target just a little by not being fiscally profligate, but by definitely not being so hard-bound, because the fiscal deficit should not be seen as something that is cast in stone. There would be a case at the present juncture to look at it in a slightly more pragmatic fashion and always spend on capital expenditure, not on revenue expenditure.
I don't think monetary policy is the answer to really push ourselves out of this slowdown that we are experiencing right now. Even on the fiscal policy, I think shifting away from the fiscal deficit consolidation path is risky. Not just from how it's perceived within perceived by the central bank or the other policymakers, but it's also from the rating agency's perspective. So along with that, the FPI investors. So I think it's important that the fiscal deficit is maintained.
Well, that's a big ET now exclusive. Top government officials believed to be in a huddle to assess the need for a stimulus package.